Hello, everyone. Welcome to a Wall Street for Main Street podcast. My name is Mo Daoud, and today's special guest is Aaron Clarey. He's the author, banking analyst, and the blogger of Captain Capitalism. Blogspot.com. Aaron, thank you for joining us.
Thanks for having me, Mo.
Well, for people that don't know much about you, why don't you give us background about who you are and in detail what you do exactly?
Oh, in detail, well, it'll take a bit. Well, basically, I was at one point in time a banking analyst, credit analyst, many years ago. So I did that for the better part of 14 years. First job out of college, and just basically did financial statement analysis, and ended up in the build-up, not during, but in the build-up, noticed that housing prices were starting to exceed rents rather quickly, and not to mention our loan quality was going down. So I tried to stop that and ended up ramming heads with management, and that kind of led me into the career that I have today. So I wrote a book predicting the housing bubble, predicting the crash, and explaining how it got up to that kind of from an insider's standpoint. So naturally, when I wrote that book, no other company would ever hire me again because once you go down that path, you're completely unemployable by traditional means. But I had built up my blog for the past 6-7 years, had some decent online revenue, and also taught dance class at night, kind of as a moonlighting career. So I had enough money, I didn't have to work in banking again, and that kind of slowly then evolved into what I'm doing now. So I have several books out. I have a blog, rather popular, make a living off of the ad revenue there, and then kind of your YouTube and a podcast. And I also have, not to be crass, but I have a consulting arm called Asshole Consulting. You can go to assholeconsulting.com. And I basically advise younger people, not always younger, but typically younger people, who are unemployed, who are lied to, whose parents and teachers and guidance counselors said, oh, go to college, major in whatever, and life will be great. And are now suffering with the Great Recession, or at least certainly record high under and unemployment. So it's kind of, I've gone from banking into an author / consultant / YouTuber / podcaster. But as long as I don't have to work in banking ever again, I'm perfectly fine with that.
Yeah, I don't blame you. This seems like a lot of people that predicted the housing bubble receive a lot of backlash from Wall Street. I don't think you're the only one that became unhireable by Wall Street. After you came out with that book, a lot of people got a lot of criticism. Peter Schiff did, other Austrian economists and investors like yourself as well. And I just wonder now if you think they'll hire you back now that you got the prediction right?
Oh, good Lord, no. They got bailed out. So, a recession is tradition. It's a cleansing. That's what a recession is. You fire the ineffective people, the bad companies managed by bad people go belly up, and those people aren't allowed to work again. Well, we bailed them out. And pretty much every banker I know, bar some spectacularly, like where it was almost criminal negligence, most of them are working just at the bank down the road. And this time with a lot more federal oversight with Dodd-Frank and all these other federal regulatory things. But they're still there. And this is why you have a zombie industry where they're desperately dependent upon low interest rates from the Federal Reserve. There's no investments that they can make. Their credit control is still poor. But no, there's no way they'll take me or Peter Schiff back. It has nothing to do with production and efficiency and profit. It is all, I hate to sound so conspiratorial or so cliche, but it really is a network. It really is who you know and not what you know. And they'd much rather, since profit doesn't matter, they're going to get bailed out by the government anyway. Efficiency isn't key. It's about being nice. It's about politicking. It's about making your boss feel good. It's about not rocking the boat. It's about getting sales and volume, but not necessarily profits. And and if you have the government bailing you out all the time, you don't have to worry about that. It could just, hey, let's go play golf and make loans to people who won't pay it back, and then we'll pat ourselves on the back and play imaginary make-believe wannabe businessman. So that's kind of, there's no way Schiff, me, or anyone else that predicted this is going back.
Yeah, I agree with you. Wall Street, just a bunch of, well, not all of them on Wall Street, but it's good people on Wall Street. But a lot of them are a bunch of rent seekers that rely on the government to bail them out when they fail. So, and that allows them to give them more incentive to take more risks, because they are taking more risks now compared to the housing bubble. I mean, the derivatives market is exploding, and that cannot be done if the Federal Reserve is not bailing them out.
Oh yeah, I mean with this low, I mean look, it's like you never punish your kid. You keep bailing out your kid. Your kid's never going to learn. And these are just older versions of those kids, and so they got a super low interest rates, so they can just do the carry trade if they want to do something non-risky, or go into derivatives, as you pointed out, very risky. We're reinflating the housing bubble. I don't think it's at critical level as it was before. And even if it fails, guess what? They'll get bailed out again. So there's no, for anyone who's younger and listening, if you have a modicum of morality, or you insist on doing work and working hard, and you believe in a meritocratic system, don't bother going to work in the banking industry. It just isn't worth it.
Yeah, I just called Wall Street a bunch of rent takers, so I don't think they're going to be calling me and try to hire me anytime soon.
No,
that's okay. But anyway, let's move on to the economy. Now, in your blog, I noticed you talk a little bit about asset price inflation, and there's a lot of Main Street economists and analysts saying there's absolutely no inflation in the economy right now, but if you go to the grocery store, if you look at the stock market and real estate, there's inflation in there. So do you believe the economy is experiencing asset inflation that's in the stock market, real estate, and other asset classes, or do you think we're experiencing inflation and deflation going on at the same time?
No, I know we are experiencing inflation, and most of the inflation is occurring in assets. Now, the reason why, or investable assets, I should say. Now, the reason everyone's okay with that, like everyone's happy when stock prices go up or the real estate prices go up, is because it's the wealth effect. They feel like that's a good thing when stock prices go up. They get upset when when their consumables go up, when gas goes up, or food goes up, or clothing goes up. Then they get very upset about that. But it doesn't matter. Let's be real economists here. It doesn't matter where price increases occur. Prices going up is inflation. And if they go up faster, then you can use a CPI index, or you can use you could say gold or silver, some kind of base. If it goes up faster than that rate, then you're losing purchasing power. So a perfect example is all these young kids. They don't have the money yet, but they think the stock market going up is a good thing. It's like that's the last thing you want to have happen right now is the stock market going up. You want the stock market to crash. You want it to go down to you want the Dow Jones Industrial Average to be 1. That's what you want it to, and then you can buy it up all on the cheap, and then sell it then you want it to go up as much as possible, and you sell it when you retire. These kids are getting priced out by all these, trillions of dollars worth of retirement money, 401ks, 403bs, IRAs, stuff like that. That's my generation and baby boomer money just flooding the market and making it not worth the price that they're being asked to pay. But because we think, we've been programmed, stock market up good, housing prices up good, but gas and milk up bad, no one's going to complain or dare point out that actually is economic inflation.
And I agree with you there. I mean, to be honest, I would love to see a stock market crash, and then we could see maybe Apple on under $100 again, like we saw back in 2009, or Steve Starbucks below $30, which I mean, I would buy that up and bunch it today if that ever happened.
Yeah. Well, I mean, it's like I'd love to see a PlayStation 4 go down to $50. Everybody'd be happy if a PlayStation 4 went down to $50. No, we want that Dow Jones to rate 20,000. I don't get it. It's humans. They're funny things.
Yeah, I don't think people understand the upside of having a stock market crash. I mean, a lot of assets become cheaper and affordable. Like not only in stock market, but in real estate and other asset classes, like in gold and silver. When gold went up to 1,900, then it crashed down to 1,200 and became cheap. And people in the East, especially in India and China, were buying them up like crazy. And the same for silver as well. When it hit 48 and went all the way down to $18, $19.
Oh yeah, no, I bought a bunch of silver when once it dropped below 20. I'm like, holy cow, I gotta. It was almost compelling. Like I was thinking, like, well, maybe I pay off my debts a little bit more, pay off the house a little bit more, well, the truck needs some new brake pads or something. All of a sudden, I'm like, it's how much? It's like, boy, I better take a position in steel, not steel, but silver, just because it was so compelling. But now, you're asking the average person to pay attention to, commodity prices and precious metal prices, and that's just not as sexy as Miley Ray Cyrus shaking her ass on the television. So I don't know how we get the kids unglued from TV or watching football to start paying attention to silver and gold and asset prices. But in the meantime, that's all right. People don't have to flood the market; they can keep prices down nice and low.
Yeah, exactly. Moving on and talking about the stock market. Ever since 2009 or 2008, when the financial crisis happened, there hasn't been that much volatility in the stock market. The Dow Jones and S&P has steadily been going up, making all-time high. I mean, we saw some correction here and there between now and 2009, but we haven't seen a major correction like we saw in the 2007 financial crisis, and even before that, when we had that volatility going on. So why do you think there's no volatility in the stock market?
It's basically money is flooding the stock market from automatic investment, like I call them 401k zombies, where people mindlessly just contribute their $200 to $400 a month into their S&P Spider Index Fund. So you have trillions of dollars entering the market, or trillions have entered the market over the past several decades, and hundreds of billions enter it every year. And then also a Federal Reserve policy, not in a direct sense, but kind of this is a more recent event in the financial markets as opposed to retirement plans. But you have companies that just don't want to invest in the United States, and I don't much blame them. The work ethic is low. People major in the dumbest things. They can't find people with skilled labor. And if a company tries to invest, then all sorts of legal and regulatory and union attachments are made to it. So companies are saying, well, the heck with this, let's go invest overseas. But even if global growth slows down, a lot of them say, well, okay, we've invested overseas as much as we're going to. We're still profitable, and they're sitting on a couple $1 trillion in cash. And say, well, what do we do with it? Well, we don't want to invest in new plant and equipment. We don't want to hire people. But you know what we can do? We can repurchase our shares. So if you look at, David Stockman did some great research on this, and he pulled the data for the entire S&P 500, like all the top 500 companies. And I can't quote the numbers, so I'm going to quote numbers that I do know. But I took a look at Exxon, Colgate, Walmart, and Apple. And you pick your poison. Take any large Fortune 500 company, look at their statement of cash flows, and what you're going to see is that they are repurchasing hundreds of billions of dollars worth of their own shares. Not because they think it's a great deal, but for two reasons that have nothing to do with whether or not it's a great deal. One, they got nothing better to do with their money, and two, it helps bolster the stock prices and therefore put the stock options in a striking distance where they're exercisable for their executives. So that's why the stock market just keeps going up and up and up. And whereas you may have, remember when economic growth came in at -3? Oh, it was nothing. It was the winter. It was the weather. Nothing phases this market. And the reason nothing phases it because there's just so much cash floating around in it. The price per stock or cash per stock is going to be resistantly high. So no matter what, I might go down a little bit here or there, but the general trend has been up. And in that general trend, and with any severe correction mooted by the inflationary dollars in the stock market, volatility has gone down. So that's the reason the VIX is at an all-time low, even lower than it was right before the housing crash.
And that's a great point. And we discussed the lack of volatility in the stock market in a podcast that we did, a Market Wrap podcast. And we stated one of the reasons is, as you said, the Federal Reserve printing endless money and bailing out the banks and indirectly pumping it into the stock market. And then also you talked about how major corporations are repurchasing their stocks, and also the public corporation in the stock market are also manipulating their earnings, where a lot of the analysts are revising their earning down, and all the companies have to do is to just meet that earning estimate, and the stock price goes up, making it look like that they had a great quarter, even though they didn't, because all the analysts and the companies themselves revised their earning estimate.
Right. Well, and the stock market no longer represents what it's supposed to be. I mean, a stock market was where you'd go and you'd find investors and you'd find companies or entrepreneurs. They'd meet and you'd invest some money into a venture or a company, and that company would then go out and invest in a plant or whatever and make profits. And then henceforth, those stocks would be traded on the secondary market, and the prospects of the company, namely its profits, would drive the stock price. Well, because of all this hanky-panky BS with Federal Reserve dollars floating in, low-interest borrowable dollars that can replace equity, the retirement money, the stock market no longer is efficient. It doesn't measure profits. It doesn't measure dividends. I mean, if you look at dividend yields, I think they're back below 2% now. Maybe they went back up. But that's on a historic average of 5 going back to 1881. And the S&P 500 PE ratio, that's 26. That's even higher. The only time it was higher was during before the 1929 stock market crash, and we had the dot-com bubble. It's even higher than it was before the last crash in 2007. So what the stock market really is no longer this pricing mechanism or this machine that tells you about or tries to accurately assess the future earnings potential of companies and the true intrinsic value of a firm. It's a dumping ground for various sources of cash that happen to be invested in these vehicles. They're basically just being used as vehicles to park money, not necessarily being purchased as genuine investments.
And because of the market manipulation, as you said, the government and Federal Reserve is sending false signals to the economy, and that's creating a lot of bad investment and malinvestment, and also they're just kicking the can down the road as well, because they're just going to lead to another collapse in the economy, in the bond market, in the stock market, and also in the real estate market again.
Yeah, they're not. I don't know if it's necessarily the national debt is what I'm more worried about, where they're kicking the can down the road. This is just turning our economy into malaise. It's kind of funny. You say, well, with all this money floating around, and shouldn't be people rushing to invest? It's like, yeah, but you also have to have a soul and a spirit. You also have to have an entrepreneurial, capitalist, pro-profit, pro-freedom spirit, and that just isn't on the demand side for these borrowable dollars. As I said before, companies aren't investing. You can look at cash flow from investing, look at investing in plants and assets, and see, that's kind of dwindling, and private investment certainly is down. So you have the Federal Reserve. It's so funny how they think they actually control this economy, or they think they can actually do something to help boost it. They're flooding the economy with all this money, but no one wants to borrow it because this is a crappy place to invest. It's so you got a glut of these trillions of dollars just sitting around in the bond markets. No one really wants to borrow it, so interest rates are really low, and it's just no one has anything better to do with the money. So now just, okay, let's go and, buy back more stocks, or, everyone gets excited about Uber or Lyft, and I am excited about them, but they're not worth a, $2 billion valuation, or Twitter. I'm sorry, I don't know what the valuation is on Uber or Lyft, but Twitter, come on, really? That's Facebook? No, these are not companies. These are entities that just happen to have good timing with the stock market, and bored money that has nowhere else to go is going to go to where it's glamorous and exciting. And so Facebook everyone uses it, so it must be profitable, or it must be a good investment, but no one bothers to look at the profit. So it's a funny, entertaining, and humorous market.
Now, Aaron, you're an expert at stock valuation. I believe you teach an online class on how to evaluate stock. Is that correct?
Correct.
So let's talk about that. Now, do you see any sector that is undervalued right now that the main 3 investors should take advantage of?
Oh, no. I mean, I'm very old school and a traditionalist. When I was younger, not much younger, but when I was in the thick of doing my equity research and trying to get historical perspectives, I went back as far as the data could to like 1880, which is where Robert Shiller has all of his data. And I'm just looking at valuations across all sectors, and they're horrible. They're just, you're not going to find a stock that pays a dividend yield of 5%. If you do, you got to worry about whether it's going to be around next year. The PE ratios are just way too high. There's just too much money all over flooding the market. About the only thing I would say would be kind of like a commodity-connected stock or mutual fund or sector. So, mining companies, and it's been said before, it's not like I'm giving anybody a tippy-top secret, farming, agriculture-related things, only because there actually is intrinsic value there. And that will be first hedged against any kind of hyperinflation if it does finally start to seep into the system. I don't really like, whatever a 25-year-old girl you see at a nightclub that recommends or would say she'd like to invest in. I do not like those. I do not like Facebook. I don't like Google. I don't like Apple. I don't like what every boring automaton that doesn't think goes and invest. I know analysts have their predictions, but I'd be a contrarian. And truthfully, I haven't looked at the stock market in a long time because I think my money's better invested in paying off debts, in buying silver. It's not a huge investment, but I've been buying a couple guns because they're more fun. Silver and gold just sits there. A gun you could go shoot. They're a lot more fun than a roll of silver quarters. And that's really all I've been doing. So I recommend it for people, since the markets are so overvalued. I'd say now is the time. If you got some credit card debt and it's charging 12%, knock that out. That's going to be a much wiser and risk-free investment of your money. If you got a mortgage that's like 4%, you know what? That's a pretty good rate of return, given dividend yields are only like 1.8. Go to peer-to-peer lending. See if you can eke out a couple extra percentage points on lending out money and cutting out the banks. But yeah, going into the stock market, no, nothing looks appetizing. It's like, never mind. I was going to say something, but it'd be inappropriate. So, but it's not worth going to that party, let's just say.
I get you there. But I agree. I think most sectors are overvalued except the commodity sector. But the problem with the commodity sector is that a lot of bad management in that sector that really don't know what they're doing, and it's very volatile because it's connected to a certain commodity, like we saw in the gold and silver mining sector in the past couple of years, where it was riding high when gold and silver was riding high. Then when those prices collapsed, then I'd say probably 80% of those junior miners went underwater because of bad investment and bad management. So that's the downside in investing in commodities. And if people can't stomach that risk, then they just stick to buying physical gold and silver, just like you said.
Right. And that's really more just an insurance. Now, I will say this about the stock market. I know it's going to sound weird, but I always have to provide this caveat. The stock market itself is a natural hedge against inflation. So whereas I know the stock market's overvalued, PE ratios, dividend yields, all that is very horrible, I would still recommend at least buying some U.S., the S&P 500, not because of diversification, but because they're naturally hedged against inflation. If all of a sudden inflation comes in, these companies are going to jack up the prices, and by default, they're going to ensure that their profits are maintained. And so their profits, although not in real terms, but they will be inflationary adjusted, simply because they're going to have to be. Otherwise, these companies go out of business. So I would, I know a lot of people on the alternative media, alt-right media, we always, oh, it's conspiracy, high-frequency trading and manipulation by the Fed. Yeah, that's all true. But take a look at the Zimbabwean stock market or look at the Venezuelan stock market. And once that hyperinflation hit, the companies are making real goods, had real assets and real profits. Those profits naturally adjusted for inflation. So I would invest in the stock market, understanding it's a hedge against inflation.
So the final topic before I let you go is, as you mentioned at the beginning, you give advice to young people that's trying to thrive in this tough economic condition. So let's talk about that. You mentioned that going to college is pretty much a waste of time and money. So what do you think young people, young workers, or young adults need to do if they want to thrive in this tough economic condition that we're having right now? Because I read an article, and I mentioned this many times before in other podcast, but I have to mention it again, that the class of 2013 and 14, 80% of them cannot find a full-time job. So that's tells you how bad the economy is out there. So what advice do you have for young workers out there that want to succeed?
Well, one, I'd say don't be in a rush to get a college degree. Not all college is worthless, but there's a lot of worthless degrees out there. So you got to go. I know mommy and daddy and the teachers and the guidance counselors and all the touchy-feely politicians told you, and Disney Channel told you that you just go and do what your heart and the money will follow. That's BS. You cannot do that when you're being asked to spend $75,000 on a degree in 4 years of your life. So you have to do a lot of research, and I wrote a book called Worthless, and it's a guide for choosing the right degree. And so the first thing you got to do is find a field, a discipline, a skill, or a trade. It doesn't have to be a 4-year degree. It can be a 2-year trade. You could go into an apprenticeship, something, and get a skill in that. Now, that being said, as you pointed out, even if you have the degree, there's so many kids graduating with degrees, and the economy is so bad, and on top of it, all the old people aren't retiring because they plan very poor financially, so there's no room for promotion or entry-level jobs because there's just a logjam in the labor market. So the next thing you gotta accept is that no one is gonna take you seriously until you're older. I had a client yesterday. He was all worried because he was 26 and he got his MBA and he thought that he wasted his time waiting this late. I said, "Are you getting job offers?" He's like, "No." "Are your friends getting job offers?" He's like, "No." I'm like, "That's because no one wants to hire young people. There's no demand." So no matter how much dirt people have blown up your dirt chute and saying, "Oh, you're great, you're wonderful, you're going to achieve great things," sorry, the reality is there's no opportunities out there. This leads to the third thing. Yes, you're going to go and get your trade or your skill or something that's going to hopefully get you a job. But the only true source and the primary source of success that people are going to have in terms of careers and finances is going to be self-employment. You cannot rely on this economy and previous generations who have so mismanaged it to present you opportunities. You have to go out and do it yourself. And I know a lot of people don't like being entrepreneurs, have never thought about it or didn't think it's in their blood. Tough. You got to find something on the side, and whatever that is, make it work, because you're going to be a much better employer to yourself, and you're going to pay yourself a lot better, and you're going to be much more reliable than these companies that, they don't care. And I'm very pro corporation, I'm very pro capitalism, I'm very pro free markets. But these companies do not care about you, and they will fire you and cut you off and lay you off if they can make an extra buck. So you got to find something you're good at, not only work a daytime job, but then you got to start something on the side at night. And I taught dance class. That was my second job. That was how I could make ends meet. But whatever it is, you got to do that. And then that is, I guess the 3 key things to success I'd recommend to the younger people.
And that's great advice that you just give. And also, with the internet, it's becoming cheaper to learn a new skill if you want to online. So one of the great things about free market is that internet has brought prices down for people that want to learn a new skill, whether it's social media expert or computer programming or anything related to IT. You can learn it by yourself online.
Oh yeah,
and it's cheaper than going to college.
Oh, way easier. I mean, I've learned to become a pretty good mechanic. I'm not certainly an ASE certified mechanic, but I definitely have learned a lot just by watching YouTube. And I think down the road, especially as younger people start companies and get more successful, they're not going to care whether you have a college degree. They're going to want to see skills. And I think that's going to be, it won't be the older generations, but it'll be the new generation. And, somehow if there could be a certification process where you don't have to go to school, you just have to take a test and you get certified. And to a large extent, the computer world does that already. But I think down the road, once kids, younger people, as they get older and start getting in positions of power, they're going to say, you know what? We're not hiring people just because they got a master's. We're going to hire people because they did well at this test, or they have a really great portfolio of work that we like and they submitted. So there is hope for the younger folk. But in the meantime, you got to work with the current system we got, and that just means enjoying the suck and working 2 jobs. That's all it means.
And that's great advice. Well, Aaron, thank you for your time. If people want to find more about what you do, where can they go?
They could go to captaincapitalism.blogspot.com. They can go to my consulting division, which is assholeconsulting.com. And then just, if you want to search my name, you'll find my YouTube channel, Twitter, and all that. I don't know really what Twitter is for, but I have it. But the YouTube channel, I kind of have my rants and my screeds, and I throw up some helpful videos, especially for the younger kids out there.
What's the name of your consulting company again?
Asshole Consulting.
I like that.
I know, it's great. I get to be myself every day. It's wonderful.
All right, Aaron. Well, thank you, and hopefully you can come back on again soon.
All right, thanks, Mo.
If you're tired of losing money with your financial advisor, want to ask better questions to your money manager, or would like to learn to invest on your own, Wall Street for Main Street can help you. Our goal is teaching people how to fish for themselves instead of trusting their financial advisor for everything. Wall Street for Main Street offers high-quality investor education, market research, and consulting for beginners, high-net-worth clients, and anyone else in between that wants to learn to adapt to the current macroeconomic situation, profit off of it, or hedge themselves. Please contact us at wallstreetformainstreet.com. That's WALLSTFORMAINST.com for more information. Also, if you love our podcast and website and would like to donate money so you can continue to get exclusive podcasts from top experts, CEOs, economists, authors, and all of our great guests, please go to our website to donate money, go to our Indiegogo page, or go to our iTunes page and give us a great review. We accept donations in fiat currency, Bitcoin, and also precious metals.